Hi, welcome to this episode of Industry Voice. Today I have Martin Ellingsworth. Did I get that right?
You did. Thank you, Jeff.
All right,
Good.
welcome to the show. And I'm going to have you tell us your story to our audience. And Martin, you have a very rich background working in corporate America, startup, insurance community, insurtech community. So you've seen it all. So now, I get to have you on my podcast, and then I'll let you tell your story of your journey and also some of the trend that you see. Make sure you add the trends in that you see that we've been going through the last 5 years in the insurtech change, and then where we're going to go from here. So I'm
Well,
going to turn the mic over to you, and it's all yours.
excellent. Well, nice to see you today, Jeff. My story started in a tiny little town called Frederica, Delaware. It's a flea speck of about 700 people in the middle of Delaware, about 10 miles south of Dover. And the only reason I bring that up is from small beginnings comes something more than small, stay at home, live in Delaware type of current journey. So 63 years later, I find myself in Dana Point, California. I've worked, as you said, for the last 40 years in analytics. Started with the Air Force, went to the Air Force Academy, operations research grad. And I bet and rode the data analytics and computer, we'll call it unicorn, for the last 40 years. It's uh, it's not just insurtech the last 5 years. It's not just since the internet the last 25 years. The ability to have command line driven, non-punch card interfaced, direct coding to a computing platform has revolutionized pretty much every industry. And for insurance specifically, it's made information more available on more people and more risks in every possible situation. So uh, as data has begot data, this ever expanding set of concentric circles of where you live, where you drive, what you do, how you do it, when you do it, is all becoming more observational. And while that sounds creepy in one sense of the coin, the other sense is, wow, it's so much easier in a connected world to get and do the things I want to do with the people I want to do them with. I'm definitely on the side of data for good, connected for good, and the ability to improve risk-based pricing and risk segmentation to offer people better customer experiences and better rates is, I think, what's happened the last 20 years and what's going to happen the next 20 years.
A friend of mine, Jennifer Linton from Fanris Digital,
Yeah, I know, Jen.
amazing person. I need to get her
Always.
on the podcast. I ran into her last week at Virginia InsurTech, and she was on a panel speaking, and she said that data are there, they just need to be liberated. And I
Well,
was like,
and
that's a
now you've got
fantastic quote.
liberation. You've got liberation at every aperture, at every keystroke, at every connection. So pictures now are data because you can take advanced AI models, have them look at what's in the picture, whether it's an odometer or a countertop or a roof image or a satellite image, and pull them all together to say, here's what I see. And do you agree with that or not? Because in many cases, homeowners had never been on their roof. If you wanted to know if your roof needed repair, and if someone showed you a picture of your roof, you'd go, "Wow, I didn't know there was a bunch of chipped tiles up there." So there's things that even in the plainest of day examples, being able to extract data from pictures, connections, from streaming data, you're able to pull things together in a way that you've never seen before. And that's just making the decision cycle time faster and the decision quality better.
I'm gonna do something different this podcast because I think where our audience gonna get the most from this podcast is listen to your life story. There's people I ask to talk about life story, and then there's so many people who are in tech or now in insurance or in insurtech, or they in digital transformation of a specific companies, and companies saying we're sitting on so much data, but they're unstructured. How do I benefit from all these data, taken from unstructured data to structured data to liberating the data, right? I'm gonna go through your background and you tell me a little bit story from every single one. What made you decide on the transition? What did you do there? And what made you qualify for those roles? And also, if people who are looking for similar roles, how do they get those similar roles?
Well,
Let's go with first one.
First, I'll spoil it with we'll bury the lead a little bit. The key to getting ahead is sponsorship by other people that want you to get ahead.
Mm.
And the key to sponsorship is almost always visibility, because there's executives out there now looking for the next person to sponsor. You just have to like show up in their radar, and so there's a lot of luck involved, and timing as well. But the key to all success, is luck, and certainly, and sponsorship, absolutely.
Yeah. You have 29,973 followers. You're 27 away from 30,000, which is a big benchmark.
Well,
You got a lot of
I keep
approvals.
cycling down because 30 is like a hard limit on LinkedIn. So I've come up the last year and a half, and I'll go through old connections, retired connections, connections on adjacent industries that maybe aren't as hot to trot with things I'm doing now. And I've broken a bunch of connections with links that I've not used or not asked me for anything in the last 5 years. So in those situations, I'm just making room to create new links. So cyber wasn't a thing for me 5 quarters ago. Cyber is very important to me right now. So as I've wanted to make more connections in the cyber community, I've had to like reduce my link exposure maybe into education or healthcare or other industries that are more analytical focused, but not like core P&C. So it's I'm not going to be apologetic. It's like if I chopped off a connection with somebody that wants to join back in, send me an invite. But it's usually I'm pruning parts of the network that I've just not interacted with for a long time. And I'm like an OG of LinkedIn. So 2004 was my birth date there. 20 years of networking gets you to 30,000 people if you just do a few every week.
That's really sad that you have to even chop off connections. People are going to miss what you post about, because all the premium account that I see people pay on LinkedIn, like at least give us double the connections if we are going to pay for being the content creator. I mean, we are the platform, right? The people, the creators is what drives LinkedIn. And there should be like, okay, you can pay for premium, you can up to have 60,000 connections. And then if you create enough content, you can have up to 100,000 connections. There got to be like a better system out there. But anyway, that's a different time.
Different topic, different time. Note to LinkedIn, if check out who's generating content that people are following, and maybe put in a speed bump opportunity.
And that bar should be set on based on impressions, right? You hit this amount of impressions, now you consider a creator, we'll give you extra connections. So this way that you're going to drive our website and get us more traffic time, right? Average daily user traffic time. But let's go back to Martin. Your first tech analysis role is customer research and strategy at Fireman Fund Insurance Company. Thank you for watching this video. Now a quick message from our sponsor, Mav.
Thanks, Jeff. I want to let you all in on a secret that top producing agencies don't want you to know about. If you're in P&C insurance, you know firsthand how much you're getting squeezed by your call center. It's becoming less predictable and less economically profitable to scale. But here's the thing. The top producing agencies making over $100 million are not running their leads through a human-based call center. They're running them through an AI expert like Mav to qualify, quote, and hand deliver the highest intent qualified leads to your agents. Mav takes care of the back and forth, having unlimited 24/7 conversations with your leads that are personal and relevant so you can scale to the moon. Ready to ditch your call center and 10x your agency? We're giving the listeners of insurtech's $15,000 worth of credit to try Mav. Head to hiremav.com/insurtechs to claim this offer.
Fireman's Fund was my first PNC, carrier. And prior to that, you'll see, Eddie was in other positions. So I spent 8 years in the military, mostly during the Reagan administration. So back when Cold War was on and the Berlin Wall was still up, and there was James Bond type villains roaming the earth. President Reagan was the keynote speaker at my graduation. So I always, that's a memory that stays with me for sure. But the Berlin Wall did fall. The standing military force did get cut by close to a third. And for a guy who was doing math on complex systems and logistics with manpower and personnel and analytic outcomes, research lab environment, that type of job could be outsourced or converted to a civilian role. When I was sitting, at the Air Force Recruiting Service doing the 5-year defense plan for people, it's like anybody that's not driving a plane in the Air Force is gone. So, and if you're not gone by some reason, what's your career going to look like? So I left the Air Force, with a wife and 2 small children, and headed out in '91, kind of unreally thinking of there's a terrible recession going on. But I had faith that I'd find a job, and we moved to California, found a job, and got started in healthcare. So that was like the transition of why'd you leave the military? Because the military was no longer a option for a non-warfighter in a decade that's going to be completely downsized. So it was, the career just wasn't there. The mission's still there, and I think that's all the veterans, online or coming into the line. The mission is still there, and it should be a worthwhile pursuit. But for me at that time, as a non-fighter or non-combatant, the opportunity to have a career was just disappeared by budgetary expense. So I took an early out. I'd just gone to grad school. I owed them time for grad school, and they said, "Hey, if you get out by the end of the year, fiscal year, we'll forget all about your grad school commitment." So I said, "Okay," and I left in kind of the same period as my second daughter was being born. So right after they went to the hospital, I left on 30 September at the end of the day of that year, and moved to California, found a job in healthcare, spent the next 8 years in healthcare. The thing I didn't know about healthcare in the 90s in California was all the HMOs were going to merge and purge on top of each other. So, the process of coming home, once every 2 or 3 years with a need to go get a new job got wearing on me. And I was looking for an industry with better data. And by better, I mean healthcare data is so fragmented with annual renewal plans, changing administrators, people moving, people changing jobs, people getting new doctors. That the healthcare record, back in the 90s, and I'd say still today, is like the worst data there is in terms of personal service. So the fragmented across systems, across platforms, across companies, across benefit plans. Everybody I know struggles even getting their own health data together, when they own it, so to speak, not just millions and millions of customers that you're trying to orchestrate. The thing that found me and PNC warming up to each other was workers' compensation data. So part of my healthcare ops was a 24-hour care program. I worked with a large state compensation fund, and found that there was a lot better clarity with work comp. And my healthcare background gave me the experience to talk about casualty and medical codes, and provider services and fee schedules and networks. So the ability to walk and talk into workers' comp managed care moved me towards PNC. And then, from there, it was more about, do I want to be a consultant or do I want to be a company guy? And that's when my, similar to you, Jeff, I had, two small children, 5 and 6, then becoming 6 and 7, then becoming 7 and 8. And my consulting time was like all on the road, all in hotels. And my wife and I goes, what am I doing? Yes, we should like get a different, get a different role where I was not on the road so much, at least while the kids are young and let's say they always need you, but I think it's more fun to be needed when they're between 5 and 10. So that's when I transitioned to a company job and moved to the Fireman's Fund opportunity up in Novato. So personal story, personal transition, maybe a little longer winded than some, but I'll let you like take that out in editing.
We're not going to edit that part. We're going to keep it through and keep it authentic. ISO, very interesting. And USAA, AVP Insight Delivery, XR, Exploratory Research, Data, AI, and Advanced Analytics. January 2018 to August of 2019.
Right before COVID hit, huh? So
yeah. And also like, I think like some of your roles was really ahead of its time, from your ISO days to your USA days. I mean, can you imagine if you were sitting inside USA with the same role when ChatGPT rolled out, and then all the functions and features that it has now you can leverage upon with 2.5 million developers that's now working on their own companies?
Oh, that's gotten crazy, huh?
It's gotten crazy, but you were ahead of time.
So, it's speaking of ahead of a time, I was like one of the first insurtech VC-backed companies in 2004. I was at Allianz Fireman's Fund. I went in to be the first data miner in claims. I ended up, a director, role responsibility in the customer research and strategies, which, 5 years after I had joined, was a group that consolidated the data science teams across the org chart. So, specialty insurance, commercial insurance, personal insurance, the marketing folks, the claims folks, the pricing and actuarial support folks, all were kind of in one huddle. And that was a real heady time to be, part of advanced analytics and insurance. And that was 1999 to 2004. So the fund was, with Allianz, was, I think, ahead of a lot of the curves in knowledge management and applying data and analytics. One of the things I had worked on first in 1999 was taking over a model that a consultant had started looking at insurance fraud or suspicious claims activity. And the breakthrough in my thinking, was based on my operations research, training, where I looked at the people doing the work of the special investigation unit. And I said, well, how do you know when you get a good file? And they say, well, it has these attributes. And I said, well, what type of attributes are they? Well, there's all sorts of like hinky, suspicious behavior. They contradict themselves. They do this, they do that. And it's different for different situations, but there's like the top 10 situations, and they each have their own kind of red flags. And I said, well, how would someone know to give you those? And they'd say, well, through the course of an investigation, when these red flags pop up, we would say, count them. One very hot red flag was I felt, the insured felt set up. So that might be very suspicious. And another one might be something else. But the concept of multiple red flags being potentially available in the story of the claim, the text analytics, was kind of the breakthrough moment for one of the ideas around using text as data. So as you can think through all the claim systems you've seen, people have conversations and they type up what the conversations they had into the note system on a good day. And over time, as those conversations and those notes about those conversations are logged, you can see if it's consistent, easy, collaborative, green light type of claim, or if there's lots of friction, disinformation, contradictions, and kind of a yellow or red light type of claim. And so that type of process led us to create a system that said, here's 6 or 7 or 8, kind of red flag activities. We can read every note that's ever typed into the mainframe at any time on a recurring basis, and we'll just update the notes as we go. And the process of looking at that information state of how suspicious is this claim today, using the text information as a data item was the way we went to market. And then you could create an interface that said, always poll people for the same type of questions, but whether you did it latently or whether you did it actively, the idea of what's the current state of suspicion and should it be referred is a continuous data-driven process. And that's whether you're getting data from text or from connections or from images or from forms or from PDFs or from anywhere else. The idea of being continuously data-driven is I think as valid today, 20 years later, as it was back then.
So when you went to those roles, what made you qualify for those roles? And what did you do for yourself to get qualified?
Well, I think first, be viciously curious, and try to understand what's the business process and what does a good or a great outcome look like or a bad outcome look like, so that as you approach a decision maker, a technology provider, a colleague, you can communicate, very clearly that, and maybe transactionally, that, in any specific project, you're going to go through this process. But holistically, you're here to help them do more with data than they're doing now. So it's no one can say in an insurance company that they don't need information. And they certainly can't say they don't need good information. So it's almost begging against the question of, well, why do you need help? Maybe you don't think you do. Would you accept help if it didn't cost you any money, people, time, or effort? Because we can run these models behind the scenes and let them learn as they go. That always kind of got an open door. Sometimes it got slammed in your face again, but you open enough doors, you'll find projects that are successful. And what I did to prepare myself and my team was, admit that whatever you thought you learned in college doesn't matter, because the internet for me didn't happen then. The Lucene, the great and awesome web crawling technology, was still kind of new. And as you look at new data sources or new ways to use data, being curious about how you can add that to your skill set and to your business problem is the advice I give everybody. It's like, you always need to be learning, and you should always be reevaluating your old decisions, because sometimes a cool new thing like a ChatGPT could change what you used to think is impossible and improbable to now it's acceptable and expected. Even things as small as breaking open a PDF. There were times when no one thought it could be done, and now it's commonplace for tables inside of HTML documents, PDF documents, even pictures and scanned images are getting more and more accessible as extractable data, usable information.
Very cool. And I have some curveball questions.
All right, swing it.
We're now going to start with some softballs. With ChatGPT and every single day we wake up, there's a new change in ChatGPT features for the developers. If you have the tools today of ChatGPT, and then you're talking to Martin from 2018, 2019, sitting at USAA, How will your workday be different if you had those tools that you have today back then?
Well, the easiest thing to see is that people using the technology would have an advantage in both productivity and I'll say influence in the organization because they're just going to be so much more productive and efficient in getting everything done that compared to people without the technology and without the ability to use the skill sets. Now, because it's 5 years ago and it's kind of pre-cloud or early cloud, and people were like nauseous, in every industry around security issues and responsible AI and what's fair and what's personal and what's private. Yeah, I would probably tell my younger self, don't worry, just pay more for a bigger, CPU and a bigger, hard drive, and you could do everything on-prem. So there's a, if you're not ready to go to the cloud because you don't understand your data or you don't understand your what could possibly happen, isolating it into kind of an air-gapped interface where you can learn is what you should do. And I think I still give that advice to people today. So don't let fear stop you from progress.
I like it. Let's move forward a little bit. Fast forward to your time at JD Power.
Love JD Power. What a great brand.
You were executive director and you managed their P&C insurance intelligence.
And healthcare too. But
Okay.
P&C was so much bigger, that was the focus.
Yeah. Did you lead a team? What was your project? What's your day-to-day look like over there when you were there?
So there's 3 jobs for me at JD Power. One was don't screw up syndicated workflows. And some of the syndicated reports, like the claims study or the auto insurance study, they've been around for 20 years. And they've got a lot of subscribers. They've got a cadence of expected publish dates. They've got kind of flowing, customer surveys of data. So the making sure that keeps running like a top, and the information is available to customers both pre-publish in the data side and post-publish quickly for outbriefing was a big piece of that role. And then keeping the industry executive tone from the top to interpret and add color and commentary to what does consumer experiences in the market today mean, in the context of competition and the context of, recent quarters, recent years. So the ability to, tell a story was the best and brightest part of being in charge of a dozen, different storylines, from agents to homeowners to auto to telematics to shopping. The other parts were, new business development and helping them understand how to use, deep automotive data assets that they had acquired either through acquisition, through long-term development, or through mergers. And that's where I used a lot of my ISO experience dealing with automotive and homeowner data to help them focus on what matters most to insurance companies and to insurance customers.
So walking on that one, and then now, next phase of your career, you're doing consulting work.
Some of I've gone through cycles of corporate to VC back to consulting. I always love my consulting time the most because I can talk to whoever I want about whatever they want to talk about. But I tend to, after a while, get tired of always be selling, always be marketing, and being so transactional. Because at some point you can give away your time and effort, but as you start to charge people for this and that, it's not the work that's not fun. It's like the hassle of collecting your money that's the pain. So it's and the consulting advisory doesn't give you a scorecard that the public sees. So if I'm growing a business, I can say, look at how many policyholders I've added, look at my retention rate, look at my profitability, see how many, bad guys I've caught in my fraud model, see how much money I've collected in subrogation, look at my customer satisfaction score, and what that does to my overall profitability. So, I'm really, really active in the insurance accelerator and kind of seed range startup insurtech community. I've been volunteering for the last 5 years with Creative Destruction Labs risk stream program that's hosted at Madison, Wisconsin. Kind of core funded by AmFam, but really it's a part of UW Madison. Hosting that type of academic to business to industry collaboration. That's been a big piece of it. So that's been a great way to give back to the community and to give back to the industry. But as part of that process, I've also been, pulled aside by companies that are raising money or bringing a new product to market or trying to take an existing product into insurance. So, I've been doing a lot of biz dev work, not just consulting. And the whether you're getting paid in equity or getting paid in money, that's more fun. So I'm kind of blending my advisory work into biz dev, brand and logo hunting at the same time. And it's probably the best part of the current role I'm in is I can go spotting for new data and new analytical technologies, find ones that look like they're going to make a difference, that perhaps even have a proprietary approach, and bring them into an industry or to the desk of an executive that I know would want that technology if they knew it existed. So that's probably the most fun I'm having right now is like talent spotting and data spotting in the wild and bringing them in. So whether it's person segmentation for risk, whether it's a cyber data for well, I'll say the Internet of Everything's regular daily connections, or whether it's business pre-fill for understanding domains and B2B marketing and data quality. All of these have been like just fantastic engagements over the last 3 quarters.
As you are going on, I'm like reflecting on some of the companies I know who are tech driven, want to make a revolutionary change, but they don't have guys like Martin laying around. Like for them to access you as a fractional consulting advice, fractional leadership role, it would just be such a big deal to them, helping them get over some of the blind spots. If you were have to give yourself a senior chief role, what role and title would that be? Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
I'm not an AI enthusiast so much as I am a business improvement chairperson. The whatever it takes to improve your business is whether it's AI or whether it's descriptive data or whether it's a people process. Understanding how to do kind of the president of the science of better, it would be my title, I guess.
Chief Transformation Officer.
That one's a bit tainted because so many people are just so not digital. They
Yeah.
think transformation is paper to scanned images. A scanned image is not digital. It's barely electronic. So it's just not paper. So
Yeah.
there's the availability to use process analysis with workflows and kind of complicated outcomes is probably my favorite complex process to work on. And how people interact with those processes and how they change how they think about their daily work. So back in the 90s, it was fun to see the idea of scanned forms, and you'd see these red ink, paper forms, and you'd mark on the form with pencil or ink that was black or blue even. Yeah, they would scan those and pull out the fielded information to make data. And the Postal Service had been working on image recognition for zip codes so that they could like sort mail more effectively. So the early underpinnings of grabbing data from paper flows is still like useful today, but just sometimes transformation just feels like they want to take out costs and affect people more than they want to improve the business. And I'm not saying that the two aren't correlated, but sometimes you could just get people better work to do and pay them more instead of eliminating roles or eliminating tasks. At least that's my philosophy. There are some things that when you take work away from people that they hated doing and did awfully, they thank you just for making their day less awful. And if you ever tried to give them that work back, they'd all run and quit because they don't want to go backwards into a life where they had to do really onerous, terrible things like dealing with paper medical bills. You get a stack of bills on your desk and you don't know the codes, you don't know the change in codes over time, you don't know the rates, you don't know who's network or not. Nobody wants that paper back, literally. So it's great to see that at least in the last 25 years, that type of process can now be moved, into a vendor and then back to analytical processes to make sense of it all.
So a couple of years ago, everyone was blockchain, smart contracts, and then the attention got diverted to embedded and then AI, or even embedded and then cyber and then AI. Bitcoin's in the news. As of recording of this podcast, November 21, Bitcoin hit $98,000. So people are all back on the train of crypto, blockchain. How do you see blockchain play in the insurance space in the next 5 years?
Well, if you go to the Wayback Machine, a fixed block variable length record is like a VSAM file from the 80s. Or even 60s and 70s, depending on how old you go in terms of computer technology. So using the idea of of ledger and data keeping for logged information over time, still a great idea. I think the confusion of what's crypto versus what's blockchain was a lot of friction in the system, and people doing bad things with bad currency and bad crypto, and is it really money or not money? That has really nothing to do with this blockchain work. Is smart contracts, smart. It's almost like parametric insurance now. Is kind of event triggered, but you can do all that with a smart contract too. So, I'm still a fan of the technology. I'm a very big fan of the transparency and the kind of immutability of it, because you can roll it back to time and people and contracts. And it's definitely got a place in the future of risk, and certainly in the future of transparency.
Martin,
But
I
I'll tell you this: for $100,000 of Bitcoin. I wish I told my former younger self to go buy a bunch of Bitcoin. You know, the fear of missing out is past. Now it's like, what happens if it crashes and we got $100,000 Bitcoin that's worth $10. So the fear of missing out is now like the fear of being wiped out.
Yeah.
But that's all. Fear and greed is what drives capitalism. So I will tell you this though: if you thought that environmental concerns was going to slow down bit mining, you are sorely mistaken, because at $100,000 a coin, Bitcoin mining is going to eat up every power resource that they can find.
So chart today that talk about the gold ETF versus the Bitcoin ETF. We're probably a month away at this pace. We're probably a month away from Bitcoin ETF eclipsing the gold ETF, and that's a monumental change, because we're talking about the gold digital money versus the digital of digital money, and that's a mankind timeline change, or how we view alternative assets.
Certainly a tipping point. I don't know if green or ESG is going to even matter when there's that much money, but the carbon footprint for digging out an ounce of gold versus the carbon footprint for electrically mining a Bitcoin is a graph I'd be interested in seeing. So if anyone is out there is doing that type of tracking, the power consumption to go Bitcoin mining, whether you're burning coal to make electricity, or spinning wind farms to make electricity, or burning oil to make electricity, however you're doing it, it's all electric.
I got so much to say there, but
might be a good place
to
to transition into wind up.
All right, Martin, really appreciate you coming on this podcast, and I got some ideas I want to share with you offline, but I appreciate you coming on this podcast. I'm going to send you an intake form you can fill out, so this way that our audience can find you.
Absolutely.
And they can connect with you.
So the Airtable piece is done, and you can always find me on LinkedIn at Marty Ellingsworth.
Awesome. Thank you very much, and have a great one.
Thanks, Jeff.